Let's take a run through problem 7.3a. We're asked to calculate operating cash flow as well as net present value of a project. Your company is considering a 4-year project that involves the purchase of a fixed asset for $2 million. The company will use straight line depreciation, will depreciate the asset to zero over the next 4 years. And the company does not expect to be able to sell the asset once the project is complete. Okay, well, a little bit of math here, right? We have a fixed asset, $2 million. We're going to depreciate to zero over a 4-year project, means it's $500,000 in depreciation per year. Okay, so that's just bubbling around in the back of my mind. The project will generate annual sales of $1.4 million and have annual costs of $750,000. The tax rate is 20%. First, it says compute the OCF of the project. Well, to do it, I want to do one of those pro forma income statements just based on what I've got here. So my sales, and this is just a useful sort of thing to do, $1.4 million. Minus those cash costs, so cost of goods sold, selling and admin expenses, maybe research and development costs. The total of those cash costs is $750,000. So 1.4 minus 750 is 650. That's my EBITDA, my earnings before interest, tax, depreciation, and amortization. We'll take out our depreciation to get EBIT. Our depreciation here, $500,000, we just calculated that. So our EBIT is $150,000. Now again, we do not consider interest in these calculations. We want to evaluate the project on its own merit, taking interest into account. Just, that's not about the project. That's about how we funded the project. So we consider that separately, but in just looking at the project, analyzing the project, don't consider interest. So the only thing left to consider then is taxes, which are 20%. 20% of 150 is 30, landing us with net income from the project of $120,000. There we have a pro forma income statement, but we haven't answered any part of the question. That's a useful thing to do, though. You should do this if you can with the information given to you in your questions. It's good practice to have one of these, and then when you work from one of these, it's easier. So it says, what's the OCF, operating cash flow? Well, we recall OCF, the easiest way to do this, the standard way to do it. Take EBIT, you add depreciation, which is of course included within EBIT, but it doesn't involve cash, and you deduct out taxes. So for us, EBIT is 150. Depreciation, huge number, 500. Taxes are 30. So 150 plus 500, 650 minus 30 is 620. Okay, so 620 is the OCF of the project. If the required rate of return of the project is 9%, what's the net present value? Okay, so let's think about the project on sort of a yearly cash flows basis. So at time zero, year zero, I got to buy a $2 million asset. So as year zero, time zero, oops, not 200,000, $2 million in negative cash flow. Year one, YAR one, I'm just going to Y1. I almost say wrote YAR. Y1, what's my cash flow in year one? It's plus 620. Year two, plus 620, because this is my annual cash flow from this thing. Year three, plus 620. Year four, plus 620. Now, as we contemplate this, other things that would be bubbling in my mind is like, okay, what if I can sell the asset at the end? Well, there'll be some positive cash flows from salvaging that. What if there's a working capital requirement? I got to tie up some short-term inventories or something like that, tie up money in short-term inventory. Well, there'd be a cash flow associated with that. And we'll deal with that in part C. But in part B, There's none of those complications. It's just like you spend $2 million to collect $620 per year for the next 4 years. What's the present value of that? So it says, if the required rate of return is 9%, what's the net present value? All you're going to do is divide by 1.09 to the, how many years are we discounting? In this case, 0 years, 1.09 to the 1, 1.09 to the 2, 1.09 to the 3, and 1.09 to the 4. Oops. Superscript that to 4. So there we go. You would just run those numbers, add those up, and you would get the net present value. Because I have a financial calculator, this will be quicker in the financial calculator, but you should get the same answer if you do it by hand, and this is very doable by hand. I'm going to enter these cash flows into my financial calculator, though. My cash flow at time 0 is $2 million negative. Enter. My cash flow at time 1, 620 positive. Enter. And I hit the down arrow and it says, what's the frequency? Well, actually, I can use this. 4. I have 4 $620,000 payments, and that's it. So then I go NPV. My discount rate is 9. I hit the down arrow, NPV, and it's asking me to compute. I hit the compute button, 8626.3, 8626. So the present value of all these payments is positive 8626. Okay, so if you have a positive present value, you should do the project. So this is a project worth doing, right? It's on our list, and we're not going to delete it from our list. The NPV is 8626. Let's do it. Now, again, I could solve it by hand. In fact, when we get to part C, I'll do it in the financial calculator first, but then I'll just show you how to do it by hand. It's not complicated. Okay. Let me just copy this. Well, let's read part C, and then I'll worry about copying it later. Part C says, assume the project requires an initial investment in networking capital. Sorry, I looked at myself all like my finger on my chin. I don't know. Sometimes you catch a glimpse of yourself and you feel like you look weird. I look weird all the time. Assume the project requires an initial investment in networking capital of $200,000, and the fixed asset can be sold for $250 at the end of the project. Compute the cash flows for each year of the project and compute the net present value. Okay. So we've done this cash flows for the 4 years of the project. I'm just going to copy it and move it over here in case I need it again. I don't think I'm going to need it again, but I just want to not lose those numbers because I want to adjust this. So let's look at this project again. And here were the cash flows. I'm going to erase this stuff. Here were the cash flows from the initial version of the question. Now it's just saying we're going to add a couple of wrinkles. So I'll do this in a slightly different color of ink. So it says, assume the project requires an initial investment in networking capital of $200,000. Okay, so we're going to have to pony up $200,000 more money, probably tying it up in inventories or something like this, right? We need $200,000 more, not just to buy the asset, but to invest in something else. Now, if it is that, at the end of the project, we actually get back the $200,000 because I'm not going to have those inventories any longer. My money's not going to be tied up. The project's over. So we get a $200,000 positive cash flow at the end. What else happens here? The fixed asset gets sold for $250. Well, remember, we experience a gain on this sale because we depreciate it down to 0. We think the asset's worth 0, but if we sell it for $250, we have a $250,000 taxable gain. Gets taxed at 20%, meaning there's $50,000 in taxes. So I get $250 from selling the thing, but I lose $50 in taxes. That nets out to another plus $200, right? So $200,000 flows in, $250 flows in, but then I got to pay $50 in taxes. So I got to consider those as future cash flows as well. That's it though. That's all I need to do. So if I sum this up, I go, okay, I'm $2.2 million down at time 0. So divide by 1.09 to the 0th power. I'm 620 up at the end of year 1. I'm 620 up at the end of year 2. So I'm just going through the discounting method. So that's 1.09 to the 1, 1.09 to the 2. 620 up at the end of year 3, 1.09 to the 3rd power. And I'm going to have to use a calculator here. 620, clear. 620 plus 200 plus 200. Actually, I could do that in my head, but we're here now. So plus 200 is 1020 plus 1020 divided by 1.09 to the fourth power. Okay, so there we have it. Now we just need to run those numbers. I'll do it in the financial calculator first. That'll be the end of the question, and then I'll show you how to do it by hand for those that want to stick around. But let's do it in our financial calculator. So I go CF. I've got some old cash flows in there. I go second function, clear work, and then I just try it again. CF 2.2 million negative, enter, down arrow, cash flow at time 1. I'm going to do these ones individually. I think I could do a frequency 3 here because there's 1, 2, 3 of them. I'm antsy about screwing this up. I'm 10 minutes into a video, so if I screw it up, I wouldn't be happy with myself. Cash flow at time 2 is 620. Cash flow at time 3 is 620. And cash flow at time 4 is 1020. Enter. I just want to go up through them, make sure I didn't misclick anything. Cash flow at 1. Yeah, so cash flow at 0. Okay, there we go. Let's go ahead and calculate the net present value of those cash flows. So I go NPV. Our discount rate is still 9. Hit the down arrow, hit compute, and I get 91,996. 91,999. Actually, let me do it down here because we're going to be calculating these in a second. 91,996. That is the net present value of part C. We've solved the problem. So if you got to this point and you're using financial calculator like me, terrific. That's it. Go ahead and hit the thumbs up button and get on out of here. If you're sticking around, why don't you hit the thumbs up button anyway? It feels good to do. You're doing me a favor, and I genuinely appreciate it. So let's go ahead and solve the rest of this by hand. We're just going to prove that this does equal 91,996. And if I wasn't gifted or didn't have, gifted is the wrong word, given the ability to use a financial calculator, right? If your professor says no financial calculators, you can do it by hand and it's not hard. So all we do is calculate it out. 2.2 million negative divided by 1.09 to the 0 is just divided by 1. So divide by 1, oops, and it's 2.2 million negative. 620 divided by 1.09 to the power of 1, so divide by 1.09. 568,807. Because I'm rounding here, you can see there's pennies. We might end up off by $1 or $2 at the bottom of this. This is the correct answer, but we might end up off $1 or $2, but who cares? 1.09 squared to the power of 2. I just go 1 over x times 620. I get 521,842. 521,842. 1.09 to the third power. X3, you go 1 over x times 620. 478,754. And 102 divided by 1.09 to the fourth, 1.09 to the power of 4. 1 over x times 102,000. 722,594. 722,594. Now we just add up this list of numbers. Negative 2.2 million plus these 4 numbers. And we hope that we get the right answer. 2.2 million negative plus 568,807 plus 521,842 plus 478,754. And last but not least, we add 722,594. And we get, dun 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 dun, drum roll please, 91,997. So we were off by $1 as predicted. This number is more accurate, but at the end of the day, we're predicting cash flows 4 years out. So being off by $1 is not the craziest thing in the world. Okay, you've made it to the end of 738. Now, if you really did make it to the end, smash one of those buttons. Unless you hit it before, then don't hit it twice. But thank you so much for watching. Have a great day, and I'll see you in our next video. Bye-bye.